Hello, everyone. Good morning to you. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. I'm very much grateful for life and thankful to be with you here this morning as we take another fresh new look at the financial market. Well, the last 24 hours, we've had very interesting situations going on in the market as majority in the market anticipate the major events that will be coming up much more later in the week. And in fact, today begins, we'll start with the one of the high impact events we are looking forward to. And of course, except for the XAUUSD, which moved significantly well in the last 48 hours, the pound sterling has still been within a range, though buyers are trying to gain some momentum on that one, while on the USDJPY too, we have the same scenario. So we are going to be looking at this today. So buckle your seatbelts and let's get prepared for an insightful and interesting trading session. Well, in anticipation of today's trading session, I have conducted a comprehensive price action analysis on all of the assets on our watch list. In fact, for those who are with me on my Trading View and Telegram platform, you definitely must have gotten an update as regards to that. So we have been monitoring three assets for this week: the GBPUSD, the USDJPY, and of course the XAUUSD, popularly known as the gold spot. And for those who are joining us for the first time, you might be asking, what is it that we do here? Well, what we do here is to come together as a community in anticipation of both the London and the New York session, where we want to see how we can manage our existing position if we do have any, and of course get ready, strategically positioning ourselves in such a way that we can capitalize on any potential opportunity during the London and the New York session. And of course, this happens on a daily basis, 8:05 a.m. UTC, where the stream will be kickstarted technically. And I encourage you to stay tuned in and be part of the session, and of course be part of the subsequent session, as the more time you spend with us here, the more you get to understand how things work, and of course be able to eventually use the information you have gathered here to make your own independent trading decision. So once again, you are highly welcome on board. Now, with that being said here, we shall be diving right into the business. But before we do, I would like to get some feedback as regards to the quality of the audio visuals. So please let me know in the comment section if the sound and the visuals are quite okay. And if they are not, please let me know so that I can do the appropriate adjustments so we can have a better experience out here. So with that being said, I will be looking forward to your feedback. Please, Princess Abulokwe, good morning to you. Glad to have you around, Princess. I do hope you had a wonderful yesterday. All right, so I look forward to your feedback, please. I will really appreciate them. So with that being said here, we shall be diving right into the business. And as usual, you know how we do it in this community. The first thing we want to be doing is to check on the economic calendar. And of course, we know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns, hereby giving us valuable insight into how to strategically position ourselves in such a way that we can capitalize on a trading opportunity prior, during, and even after the event. So on the economic calendar, you know how we do it. We normally focus on high impact events coming in from the economic docket that affects the financial assets on our watch list. And of course, for this week, we will be looking at the US, the United Kingdom, and of course the Japanese economy. Now, I would like us to filter in the medium impact event because I want us to look at what happened yesterday and how it affected the market. So I will just include that here, and in a couple of seconds we should be able to get All right, so beautiful. So we have it right here. So yesterday's trading session was laced with three medium impact events, all from the United States economic docket, and in fact, two the JOLTS job opening came in below expectations, and the housing price index rose beyond expectation there. So it was a mixed balance there. But the US dollar did not react positively to this event, as we saw how the US dollar nosedived as we anticipate the high impact event coming in from today's trading session. So for today, we have the ADP employment change from the United States. And for those who don't know what the ADP employment change is, it is a measure of the change in the number of employed people in the United States. And generally speaking, a rise in this indicator has positive implications for consumer spending, hereby stimulating economic growth. So a high reading traditionally is considered as something positive for the US dollar. And if we look at the previous data here, came in at 324,000 for the month of July, and economists are projecting 195,000 for the month of August. So from that variance there, you could see that from the projection there, you will see that it appears that that sector is not that buoyant as expected, as majority are looking forward to a reduced number. So we are going to be looking forward to what the actual data is going to be like. Then in about 3 or 4 hours from now, we are going to be witnessing the gross domestic product annualized for Q2, another key index there, which shows the monetary value of all the goods, services, and structures produced within the United States economy during the second quarter of this year. And of course, it is a gross measure of market activity, and it indicates the pace at which the economy is growing. Now, generally speaking, a high reading is considered as positive for the US economy. And of course, the previous data on the gross domestic product annualized came in at 2.4%, and economists are projected another 2.4%, which is a sign that there might not be any difference from what the previous data is, but we're still going to be looking forward to what the actual data is going to be like. So these are the major high impact events we are having for today, and except for some other couple of medium impact events like the personal consumption expenditure prices, and of course the pending home sales, which will also give us an insight into the health situation of the housing sector in the United States. Then later in the day, we are looking at 3 medium impact events from the Japanese economy, which of course will also be something that majority in the market will be anticipating. And of course, we all know that the anticipation of this event alone is going to be reflecting on the chart as price action. And as technical traders, what we want to be doing here this morning is to see how we can strategically position ourselves ahead of this event, looking out for patterns and structures, and in fact using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insights into the market. So with that being said here, let's dive right into the business for today. Thank you very much, Princess. I really appreciate for your feedback. I'm very, very grateful. So with that being said here, we will be moving right into the next asset on our watch list for today. So the first asset we are going to be looking at is going to be, which one is that again? I think, okay. So the first one we are going to be looking at is the GBPUSD. And on the GBPUSD, we have an indecisive scenario here in this market where buyers, though price action has been caught within a range since the beginning of the week, but it appears that buyers are getting to win this tussle here as we begin to see some higher highs and higher lows within that range-bound trading activity. Now, let's talk about how the week started for us here on the GBPUSD. What is it that we saw here on the 1 hour time frame? And for those who missed out on the top-down analysis on which I did on Monday and on Tuesday, you might want to watch the previous Forex Morning Mastery sessions where I detailed on that one. So you might want to watch that so that we don't spend too much time here talking about this. So I will be focusing on the 1 hour time frame here. So since the beginning of the week, we initially observed our price action was confined within a range that was between the 1.26100 level and of course the 1.25790 to give us an insight into the level of indecision at the beginning of the week. And with a flat channel marked out on our chart, it's quite simple. You know what we look out for whenever we have a flat range like this. We want to exercise some patience, waiting for price action to either break out of the resistance line for trading opportunities, for buying opportunities, or break down the support line for selling opportunities. And in fact, we had a sell position triggered, remember, at the beginning of the week, which of course unfortunately went into stop loss. So we opened our trade on the GBPUSD this week on a loss. Then during the later part of on Monday, we began to see some traction which broke out of our key level at the 1.26, where we took advantage of a buy position. And of course, if you had moved your stop losses accordingly, just like we always preach in this community, you must have been taken out at the worst case scenario, break even on that one. Then yesterday also we had a buy position which didn't go as expected to as well. That one too also went into a loss. So we had a couple of losses this week on the GBPUSD, and the reason why that is simply because of the indecisive nature of the market at this point. Now, in the last 24 hours now, we saw buy traction resumed again in this market. Hold on a second, please. Okay, so we saw buying traction resumed again in this market. And remember what we said here yesterday, that as long as price remains above that trend line, we shall look out for buying opportunity. And of course, the key level situated at the 1.26 area is a key determinant of a yardstick that will be guiding our trading activity for this week. And one of the things we said here is that as long as price remains above the key level and the ascending trend line, we want to be looking out for structures and patterns that support the idea of buying. Now, with the scenario we had here yesterday, with this ascending trend line spotted, with a scenario of higher lows in this market, anywhere above the key level was a good spot for us to buy. And if you are taking advantage of that move right there, well done to you for being on standby to capitalize on that move. So we had the first buy position triggered right here during the later part of the New York session yesterday. And of course, we had another one right here about a couple of hours ago as we saw price action break out of the 1.26300 level to incite more trading opportunities here. So with the scenario we have here, we must have, at this point in time, you must have at least 2 positions running on the GBPUSD, where the first position is running with about 37 pips in profit, while the second position is running with about 10 pips in profit at this point in time. So if you are taking advantage of that move, well done to you for being on standby. And the next thing I will be advising you to do right now is to move all stop losses to secure this current position. And from the look of things right here, I'm of the opinion that anywhere around the 1.261 should be where our stop loss will be for all the buy positions as we continue to monitor how price action will be reacting to this descending trend line. Remember, this descending trend line was spotted on the higher time frame, and of course we needed price action to break out of that descending trend line to give us confirmations that buyers are likely going to be dictating the pace for the later part of this week. Now we have another level around this area, which is at the 1.265, another psychological level considering the round figure of that price. So we do want to be marking out that level on our chart right now, as we are going to be using it as a yardstick to guide an uptrend continuation. So we have the 1.26500 level, right? So we do want to be marking this out on our chart, very important, as we shall be using it to guide a trend continuation to the upside. So if price action goes on to break out of that structure, we want to be adding more position, while a further breakout of the 1.267 will be welcoming more buying opportunities in this market. So we have 2 more levels to use to maximize the potential of this bullish move. So if you had missed out on the ones we took advantage of yesterday and this morning. Well, let's see how the market would react to the other levels we have above here. Now, remember that there is a caveat to the ways we take advantage of trading opportunities around these key levels. Now, for those who are profitable on the GBPUSD, that is, if you have been part of this profitable journey since yesterday, then you want to be having your buy stop order sitting above the 1.265. Of course, you know we are leveraging on the profit we had made so far this week. So in case if price does not move as expected, it's still going to be within the profit we had made so far. Then another buy stop order above the 1.267. However, if you are joining us for the first time and this is your first trade on the GBPUSD, or you're yet to be profitable on this asset, then it is advisable that you wait for confirmations before you jump into a position here. And one of the things you want to look out for here is a breakout happen first of all. Once the breakout happens, scale down to your lower time frame. It could be your 5 minutes, 10 or 15 minutes time frame to look out for signs that sellers are losing that momentum. And what this will happen is you will see it on the chart reflected as either price coming back to retest the 1.265, or it could even come to as far as retesting that descending trend line where the appearance of buy pressure will welcome an uptrend continuation. So that is how we are going to be capitalizing on buying opportunities on the GBPUSD for today. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs of the opposite direction too as well. If sellers come in this market, we also want to be on standby to capitalize on that move. And of course, if we look at what has been going on in this market in the last couple of weeks now, it is more or less of a bearish momentum. So in that regard, we cannot ignore the potentials of the sellers at this point in time. And in fact, if I refresh our memories as regards to what we talked about here on Monday and Tuesday, remember that from a long-term perspective, since the mid-month of July, price action has been on a strong bearish momentum. As you will see, we have a descending trend line to confirm that. And currently, price action is around that descending trend line and has been trading around that area for the last 16 to 18 hours now, giving us signs that there is an indecision around that area. Is price going to break out the trend line, or is it going to respect it one more time to push price to the downside? So we cannot ignore the potentials of price action respecting that descending trend line one more time to push price to the downside. So let's look at what to look out for that will make us change our bias from bullish to bearish. Now, if we zoom into this current structure here and look at what we have, remember that we have an ascending trend line which we spotted at the beginning of the week, which of course we said we are going to be using to guide our trading activity. Now, as long as price remains above, we want to continue to look out for buying opportunity. But if at any point in time price action breaks down that ascending trend line, then there is a likelihood that we could be having a momentum shift coming in anytime soon. And if that is going to be the case, remember that we are not going to be getting too excited here, as we will need to wait for confirmations to happen before we jump into a position. Now, if price action at any point in time today breaks down the trend line, then we want to shift our perspective to a bearish momentum, but we want to ensure that this breakdown is a true breakdown and not a false one. Now, to do this, we will need to scale down to a lower time frame when price breaks down this trend line. Then look out for signs like a retest of structure or continued selling pressure where buyers are losing momentum or finding it difficult to break back above that ascending trend line. Then we want to be getting ready to sell. And in fact, we have multiple levels here that give us the opportunity of having multiple entries on the GBPUSD. So that is how we are going to be selling the GBPUSD for today, but I doubt it will happen. But if it does happen, we want to be on standby to capitalize on that move. So you can see how important the ascending trend line is, and let's ensure we have the ascending trend line marked out on our chart, and let's use it to guide our trading activities for today's trading session. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever. If you have questions, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. All right. So I see your comment, Majun Arun. Good morning to you. Glad to have you around. Majun, no, I've not treated gold. Gold will be the next one we are going to be looking at. So you're right on time. So welcome on board. All right. So in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset. So the next financial asset on our watch list for today is the XAUUSD, my favorite, popularly known as the gold spot. And in fact, we have a tremendous week so far on the XAUUSD, especially. I think this is the most profitable trade amongst the assets we have been monitoring since the beginning of this week, as we scoop in significant amount of buy profit from this asset since the beginning of this week. Now, before we go into the details here, I would like us to run through how the week started on the 1 hour time frame. And mind you, for those who have not watched my video on the XAUUSD, I will advise you to watch them. The links are right in the description box of this current video. Try to watch it after the session, as this will help you to have a background knowledge of what we are talking about here. So you might be asking question on how we were able to identify these key levels, these major trend lines, the supply zones we have on this chart. Watch that video and you will get a detailed understanding of what we are talking about here. Now, with that being said, let's dive right into the chart. So at the beginning of the week, we observed a descending trend line, of course. Since last week, Thursday, we saw this trend line marked out. And in fact, this was one of the parameters that was projecting selling opportunities at the beginning of the week. Now, in addition to that trend line was this range here, which we spotted as we saw price action confined within the $1,917.60 level, and of course the $1,914.50 level to give us a flat channel to work with. And you know how we do it in this community. Whenever we have this kind of flat channel, we want to wait patiently for price action to give us a signal, which will either come in the form of a breakout for buying opportunities or the breakdown for selling opportunities. And in fact, with our descending trend line right here, we were thinking price action is the chances of price action to break down the support line was higher, and we positioned ourselves below that support level to capitalize on that bearish momentum, which of course did not work out. As you will see, we saw price break down that structure, but this never lasted long, as we saw buyers begin to gain momentum around that area. And in fact, we had a demand zone, let me say, around this area, as sellers found it difficult to break through that area. And with the appearance of this buy pressure around the $1,914.50 level, we decided, if you are with us during our XAUUSD live monitoring window here on the YouTube channel, you are part of this this decision we made during the XAUUSD live monitoring window, as we identified another level at the $1,916 area, which of course also shares a beautiful confluence with that descending trend line. So we said because of this buy pressure around here, we shall be getting ready to buy if we witness a breakout of that level. And in fact, for those who missed out on that opportunity, the market was so kind enough that it came back to retest that structure before the uptrend continuation happened. So it was quite a profitable trade for us right here on Monday morning. So we were in profit before the sell momentum came in to take us out of that position. Then we saw price action drop into the zone again yesterday, remember? So we had a sell position. For those who did counter trend opportunity, I didn't take it anyways. I told you I will be waiting to see how price action will be reacting to any of these levels here. Remember, we said we are going to wait here for long-term traders, of course, to wait here and see how the market will react to that area. And if we begin to see buy pressure resume at any of these levels, we want to be capitalizing on an uptrend continuation. So for those who sold below the 1,924, I told us all that we should ensure that we move our stop losses accordingly to lock in profits as price action moves in that direction, as we will be having our TP target anywhere around this zone. And for those who are part of our XAUUSD live monitoring window, yesterday after price action got into the 1,916, I updated that we want to be capitalizing on the breakout of the 1,920 to join a bullish momentum. So with buy stop orders placed at these levels, we had the first position triggered, we had the second position triggered at the 1,924, and we also had the third position triggered at the 1,926 level as we rode this bullish momentum all the way to the upside, as you will see here, scooping over 350 pips in profit from those three positions. Well done, everyone, for those who took advantage of this opportunity. And in fact, if you still have a buy position running right now, you do want to be moving your stop losses accordingly to lock in some profit at this point in time. And the most appropriate area, I think, to lock in some profit should be anywhere below the 1,934 area. Of course, we do want to give enough room for price action to breathe. So with a well-secured position at this point, what is going to be our next line of action? Are we going to continue buying the XAUUSD today, or are we going to be getting ready to sell? Now, before we go into the details here, I would like us to run through my commentary on the XAUUSD this morning. So this morning, I shared a commentary as regards how we are going to be managing our position for today. And for those who are with me on the TradingView and Telegram platform, you will definitely have gotten this update. Now, for those who are not, let's run through this quickly. So I said here that following a profitable gain of more than 350 pips from the buy position yesterday, the trading landscape has entered a period of consolidation over the past 16 hours. Underscoring a prevailing sense of uncertainty within that $3 range that is between the 1,938 and the 1,935 range. We will exercise patience here, awaiting potential breakout or breakdown of this range to uncover promising trading opportunities. Our attention is also directed towards the upcoming ADP employment change and the gross domestic product figures from the United States economic calendar. The impending release of this indicator has the potential to shift in price dynamics, either aligning with the continuation of the uptrend or the onset of a retracement phase. Now, let's go back into the live chat and talk about this in detail. Now, look at what we have here. Since price action tested the 1,938 level, we begin to see selling pressure resume around this area, and in fact, it led into a consolidation phase, as you will see here that in the last 16 hours, price action has been confined within this range to further emphasize the level of indecision at this point in time. And you know how we do it in this community. Whenever we have a flat range like this, we want to exercise some level of patience, waiting for a signal in the form of either a breakout of the 1,938 for an uptrend continuation, or the breakdown of the support line here for an opportunity to sell. And in fact, this pattern we have here has a tendency of transitioning into an uptrend continuation pattern, as it's currently looking like a bullish rectangular pattern. And of course, we cannot ignore the potential of profit-taking activity, as those who had bought the XAUUSD at a very cheap price, let's say around the 1,920 or 1,915 at some point, will want to be doing some profit-taking activity, which of course would reflect on the chart as a retracement move. Then, in anticipation of the high impact event we are looking out for from the US economy, that is the ADP employment change and the gross domestic product annualized for Q2, there are chances that the market might anticipate this event, breaking out of the structure in one way or the other to incite a move to either the upside or the downside. Now, as technical traders right now, what we are going to be doing here, what do we want to see on this chart that will make us open another position here? Now, I want to talk about the most emphatic one, which is the uptrend scenario here, and considering the impulsive move that got us to this point, we have a structure that could transition to a trend continuation pattern, like a bullish rectangle, or in fact a flag pattern to incite that uptrend move. Now, for those who are still in the buy position and for those who are profitable so far this week, we can afford to have a buy stop order sitting above the 1,938 level to capitalize on the uptrend continuation. Of course, since we are profitable so far this week, we can afford to leverage on the profit we had made so far to capitalize and test waters around that area to see if the buy position will click. So, and if it doesn't click, then we know that we are still using some of the profits we have made to leverage on that position. Now, remember, you must have your stop loss in place. Very, very important. Stop loss anywhere around or below the 1,935, which will be dovetailing to about 35 pips stop loss on that one. But if you are new here and this is going to be your first position with us on the XAUUSD, then I will be suggesting that you look out for the breakout of structure happen, then scale down to your lower time frame to look out for retest of structure. Then you want to be confirming that uptrend move, then join that move to the upside. So that is how we are going to be joining the uptrend continuation from this area. However, if price action breaks down the 1,935 level, retest of structure, then there is a chance that price action may continue to the downside. Now, we don't know how far this is going to go. Will it be a retracement of the impulsive move that we witnessed here in the last 24 hours, or is it going to be an outright sell-off if the data from the US comes in very positive, or probably it comes in in such a way that it favors an interest rate hike during the next interest rate decision? If that is going to be the case, then we are likely going to be seeing a huge sell-off. Now, are we going to be part of this bearish momentum if price action breaks down the 1,935? Well, I would like us to look at things from an holistic standpoint to see what is really going on the higher time frame, to see how possible we can project where the retracement will happen if indeed price action drops below that level. Now, if you look at the 4 hours time frame, remember, for those who had watched my video on the XAUUSD, you must be familiar with this structure. Remember, we acknowledge that price action has been bearish since the mid-month of July, as you will see here. So we had a couple of descending trend line to emphasize the strength of the sellers. And not until the yesterday's trading session, we finally saw the breakout of that descending trend line, which is a good sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. And in this scenario here, from a technical standpoint, whenever we have a breakout of a key structure, such as the descending trend line we have here, we expect that some point in time, price is likely going to come back to retest that structure to incite an uptrend continuation. Now, we have a couple of trend lines here which shares a confluence. The first one is the descending trend line, of course, and of course we have this trend line here as well, which also shares a beautiful confluence with our key level situated at the 1,920. Now you know how we use our key level in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. So there are chances that price could still come back, to retest the structure that was broken yesterday to incite an uptrend continuation. So if price drops below that area, I think we want to be part of that move with a TP target sitting anywhere around that 1,920 zone to capitalize on the uptrend continuation, where if we start seeing buy pressure around this area, we want to be joining that move to the upside. And in fact, we should be looking at how many pips that is. From here to here, we have a maximum of about 160 pips to catch here if price action does break down in form of a retracement to that area. However, if price drops below the 1,920, then this could be an outright sell-off. So let's see how price would react to that zone actually. So there are two ways to it. The first one here is price could drop into the zone, buy pressure resume to incite an uptrend, or it could break down to incite a sell-off. So that is a very crucial confluence in that market. So let's see how far this is going to go if price will drop below that, below the support line of that channel. So let's go back into the 1 hour time frame. I just needed us to see what things are looking like on the higher time frame so that we can be on the same page here. So this is what we shall be looking at today. Our center of focus for today is within that range. Now, depending on how price action reacts to this range will be determining what our next line of action will be. So I implore us to be on standby to capitalize on this move. So if price breaks down, then we are looking at that crucial confluence around the 1,920 as our TP target. Breakdown retest is all we need for selling opportunities here. And then we also talked about having a buy stop order above the 1,938 to capitalize on the uptrend scenario. So that is my view here on the XAUUSD for today. If you have any questions whatsoever, feel free to drop them in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the last financial asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. I see your comments here, Leong YS. Good morning to you and glad to have you around. I suspect you must be new with us here. If that is the case, you are welcome on board. And you are asking that what are the currency pairs should we trade today? Of course, it shows that you are new with us. So we do have a couple of a handful of financial assets that we normally monitor at the big throughout the course of the week. And of course, I do share my plans ahead of the week during the course of the weekend. The links are right in the description box of this video if you want to watch them for educational purposes. Now, we have three assets, the GBPUSD, the USDJPY, and of course the XAUUSD, which is on our watch list for this week, and which is what we have been discussing so far since the session began. So if you are new, you are highly welcome on board. In a situation that the news comes out, I see a comment from Daramola. In a situation that the news comes out conflicting or neutral, what should be our outlook? Very good question, Damope. Are you new with us, Damope? I think this is the first time I'm seeing your comments. If you are, welcome on board. Glad to have you around. Well, one thing that we should understand as technical traders is that whatever data comes in from the economic event, even if it is positive for the economy, doesn't doesn't necessarily mean that price action will go bullish. It depends on the sentiment of participants in the market at that point in time. The fundamental factors we see, or the anticipation of these fundamental factors, often manifest on the chart in technical patterns and price movements. And this technical patterns and price movement reveals the emotions in the market prior to this event. So even if the data comes in positive, doesn't necessarily mean price will go to the upside. It can drop to the downside. But what we do here as technical traders is to sniff through the current market structure prior to this event to look out for patterns and structures that will help us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So with the case of scenario here we have on the gold, we already have a pattern which we are going to be working with for today's trading session. So irrespective of what the data comes in with, we already have an emotion captured on our charts. So that is basically what we do here as technical traders. So I do hope I answered your question, Dan. If I didn't, please let me know where you need further clarifications, and trust me, I am willing to be of help in that regard. So I look forward to seeing your feedback on that one. So in the absence of no questions, we shall be moving right into the last financial asset on our watch list for today. So the next financial asset on our watch list for today is the USDJPY. And in fact, we've had a roller coaster of buys and sell on this financial asset since the beginning of the week. Though both scenario moved moderately well, I wouldn't call that a significant move sincerely. So let's run through how the week started for us here on the USDJPY and what led to the decisions we made. Now, at the beginning of the week, we acknowledged our key level. Remember, we had a key level situated at the 146.500, which falls around the highest point where price action has been in the last 1 year. And I talked about the fundamental perspective and also the technical perspective of this market. And considering the fact that price action is at a peak as at area where the Bank of Japan intervened last year, there is a level of fear within this area. And whenever price action finds a new high, there is this psychological expectation that price still needs some time to acclimatize with that zone. And as a result of this, the emotion of fear is prominent, and we see price action go through consolidation phases, retracement phases, or even chopping in the situations before it gains some balance to push price to continue in that direction. And we've of course been seeing that situation happen here. If you have been monitoring, if you have been with us for a while, you see how we capture this kind of scenario on the chart. And from a technical standpoint, when price action falls within a high, we wait for price to balance before we jump into a position here. Now, while we have this key level identified at the 146.500, we noticed that price was oscillating around the key level, and in that regard, it formed a range where price was confined within the 146.620 and the 146.280 to further emphasize the level of indecision at that point in time. And with that scenario here, you know how we do it whenever we have a flat channel like this. We want to remain patient, waiting for a signal either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with the scenario we had here, price action range was trading range bound for about 24 to 36 hours before we finally saw the breakout of the resistance line here yesterday, giving us about, I think price moved, let's see, how many pips was that? Price moved about 75 pips thereabout before that bearish momentum began taking us out of that position. So it is quite clear that the emotion of fear is very prominent here. This is one of the highest point price action has been in a very, very long time. And the fear of the intervention of the Bank of Japan is still in the air hereby affecting this momentum we have here. Now, I remember that I shared an update immediately this bearish momentum came in yesterday. For those who are with me on the Telegram and, of course, TradingView platform, I told us all yesterday that we have been taken out of the position with a modest size of profit. That is, if you had moved your stop losses accordingly. And I was asking that will this be a retracement of the breakout of that structure, or is it going to turn out to be an outright sell-off? And I said it depends on how price action reacts to the zone that will determine if it's going to be a retracement or a sell-off. And I made mention that we will look out for buy pressure around this area to be part of an uptrend continuation, then that will be a retracement. But if price breaks through the support, this zone, then we look out for selling opportunities below the structure. Now, we saw price break down the structure here during the New York session yesterday. I updated this yesterday. I told us all to move our stop losses as we saw price move about. How many pips was that? About 50, 60 pips before the bullish momentum came in to take us out of this position. And of course, if you had moved your stop loss accordingly, you will definitely have been taken out of this position. Now, with the current scenario right now, we do not have any trade running as we have price back into the range where price action started this week. Remember, this is the range we spotted at the beginning of the week, and right now, price action is back into that structure. Now, there is some technicalities about this area which makes this whole market structure very interesting. I will be sharing that with you in a moment. But before we go into the details, let's run through my commentary this morning on how I said we are going to be managing our positions on the USDJPY today. And for those who are with me on the TradingView and Telegram platform, you will definitely have gotten an update to this one. And in fact, I will encourage you to watch my video on the USDJPY as you will have a very good perspective into what things is looking like on the higher time frame, as I did make some interesting revelations in that video. So you do want to watch them for educational purposes. Now, this is my commentary here on the USDJPY yesterday. So we had the buy position triggered. I made mention here that let's see if this is going to be a retracement or an outright sell-off. Now, this morning I shared an update here saying that the selling position was exited, securing a modest profit as renewed buy pressure emerged precisely at the point where the ascending trend line identified on the higher time frame was tested. This occurrence suggests the potential of the uptrend continuation. At this juncture, we will remain patient to observe how market participants respond within the range of the 146.280 and the 146.500. This is the range I made mention of earlier, which was where price action was at the beginning of the week. Our focus will be on identifying patterns that align with a continuation of the uptrend. Furthermore, we are keeping an eye on the ADP employment change and the gross domestic product figures from the US economic calendar today, as they could offer additional insights and guidance. Now, let's go back into the live chat. What is it about this live chat here? Now, looking at the structure here and looking at the range where price action has been since the beginning of the week, this range here is our equilibrium for this current structure. And there is one more thing that was not mentioned. I would need to mention here to make things a little bit more clearer. Let's scale up into the daily time frame quickly. Let's see what is going on the daily time frame. Is it the daily time frame or the 4 hours time frame? I think it's the 4 hours time frame. Let me just refresh our memories here. Now, on the 4 hours time frame, it is a clear scenario here that price action has been bullish since the month of July. And in fact, we have an ascending trend line to buttress the strength of the buyers in this market, as price action has consistently respected this trend line. Now, if we zoom into this current structure, you will see here that the 145.800, a level where price action tested during the New York session yesterday, as you will see, price tested it and is close to that ascending trend line here. Now, for me at this point, will this be a sign of an uptrend continuation, if we begin to see some reversal pattern unfold here, it could take quite a time before this happen. It could take about 4 to 5 hours before this happen, and it might take lesser than that depending on how market participants anticipate this event today. To insight an uptrend continuation, this is one scenario we are going to be taking into consideration from an holistic perspective. And then the other scenario here is a potential breakdown of the trend line and the 145.800 to incite a sell-off. So you can see that we are at a crucial moment in this market where anything could actually happen, and we need to be very careful, sniff the current market structure, look out for patterns that will help us guide our trading activity. Now let's go back into the 1 hour time frame. So I was talking about the equilibrium within this range. Now if we look at the distance between the breakouts, look at the distance between the resistance level and the peak where price got to, it's about 77 to 78 pips. Now if we compare that with the breakdown of the support line to the lowest point price action has been for this week, it's about 60 pips. So it shows us that buyers are stronger than sellers from this particular area. Now with this scenario, I'm of the opinion that we might likely be seeing an uptrend continuation. Now because of this expectation, what is it that we are going to see here that will help us guide this move? Now personally, we already have a bearish impulsive move to the downside right here. Price action has climbed back into the structure, so I want to see some higher low sort of a thing around this area where price is unable to break the previous low. Then if I can see a higher low around this area, then my key level at the 146.500 will be serving as the neckline of this reversal pattern. So if I can see a higher low here, then we'll be having something like a double bottom structure. It could be some other reversal pattern anyways, but it could, if we can see a reversal pattern here where the key level at the 146.500 turns out to be the neckline, then we want to be part of a buying opportunity. Now there are two ways to which we can do this, for especially if you don't want to miss out on this opportunity and probably you are not the type that stays on the chart and you want to capitalize on that move and you don't know how long it will take for this higher low to form before the uptrend continuation happens. Well, I will just suggest you have your buy stop order anywhere above the 146.500 to position yourself for that uptrend scenario. Then ensure that you have your stop loss. In this case scenario, the stop loss is going to be very wide because you want to capture all the higher lows or any choppy situation that could happen around that area. So you want to be having something like 60-50 pips if you can afford that, depending on your portfolio size, to capture whatever trading activity could happen around that area. But if you are the type that could stay on the chart and monitor price action, then let's wait for price to form a higher low, then we join the uptrend continuation. Now that is one scenario here. So we are basically looking out for buying opportunities above our key level for this week. So let's be on standby to capitalize on that one. However, if price continues to drop, and remember we are at a very crucial zone in this market, one from a fundamental perspective, there is the fear, there is the awareness that the Bank of Japan could intervene anytime soon, and because of this there is fear around this area. That is one. Then secondly, from a technical standpoint, it takes quite a lot of time for price action to get acclimatized or used to a particular level, which could lead into some retracement phase along the line before some buyers can gain momentum to push price out of that structure. Now, because of the scenario, we cannot ignore the potentials of sellers. Now, outrightly, I would like to see price break down the 145.800 level, and of course the ascending trend line we identified on the higher time frame to get ready to join a bearish opportunity. But if you look at the distance between where price is here and where the breakdown is needed, it's about 60 to 65 pips. So the question here is, are we going to wait for the old 65 pips to break before we jump into a sell position, hereby missing out on that 65 pip move? Hell no. I would like to look out for patterns too within this area that will help me to be able to join the bearish momentum even before the breakdown of that structure happens, so that I can maximize the potential of that bearish move. And if a reversal pattern happens around that area, the worst case scenario is that I will be taken out at break even. Now, to capitalize on the selling opportunity even before the breakdown of the structure happens, I want to be looking at selling opportunities below the 146.280, where selling pressure below this area will give me an opportunity to sell. And if price continues to move in my favor, I move my stop loss to secure my position. And if this turns out to be a reversal pattern, I will be taken out at break even while I'm already getting ready for the uptrend continuation. And if price continues to go to the downside, then I'm lucky enough to be part and had another sell position to this one to run that bearish move to the downside. So this is how I'm going to be capitalizing and managing my trade on the USDJPY today. And of course, if there is any new interesting or significant setup that comes up along the line, I will definitely share them with you in the comment section of both my TradingView and Telegram platform. So these are my views here on the USDJPY for today. If you have any questions, feel free to let me know in the comment section, or if you need me to do any further clarification in an aspect I explained throughout the course of the session, the GBPUSD, XAUUSD, and the USDJPY, let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we close for today. So I see your comments, Damope Dan. I'm glad you found that useful, and you're always welcome, of course. What I understood from a response is that one should never enter a position only on the strength or data release. The appropriate thing to do is first. Of course, sure, that's the best way to trade the financial market. We don't want to. The release is just the culmination of the market sentiment. That's what the release is. I've got to understand that prior to the release, there are a lot of key participants in the market who already know what is going to happen during the event. And because of this knowing, they leave trails in the market for us retail traders to take advantage of. So whenever they know what is going to come out during the event, they already put in their positions in the market in anticipation of that. And if you are a technical trader and you have the ability to identify those patterns on the chart, you will definitely be able to position yourself even ahead of the event. But sometimes the volatility can be too much that we get caught up in the scenario where we get stopped at some point in time. It is very okay. It is very, very fine. But one thing for sure we know is that we are going to recoup those losses in due time when the market normalizes. So I'm very glad you found that useful, Damopedan. Sure, that is quite all right. So in the absence of no questions, I want to assume that we are all on the same page here. So I will be trying to round up on this session. And for those who don't know, I already dropped the link to the XAUUSD live monitoring window, which is coming up about 5 to 10 minutes into the New York session today. The link is right there. So you do want to click on the link, click on the notify me button so that when we come online, you will get notified that we are. And one more, for those who don't know what the XAUUSD live monitoring window is all about. Well, the XAUUSD live monitoring window is a real-time price action activity that we have here, and it was kickstarted last month, where we come together to monitor the XAUUSD live right here on this platform, see how we execute trades, see how we position ourselves ahead of a move, and see how we manage our positions, and of course see how we get ready for more opportunities on the current market structure. So it's a session you don't want to miss. Let's be part of that session. Click on the link, click on the notify me button, and let's be around to trade together. So it's on this note I want to wish you all the best of luck. Please support this project. For those who had clicked on the like button, thank you very much. I really do appreciate your support. And for those who haven't and you found this content helpful and useful in making your independent trading decisions for today, please kindly support this project with your thumbs up. Your likes are very valuable to me, and in fact it also helps the YouTube algorithm to push this video to a wider range of traders who may find this content beneficial to them too. Thank you in advance for doing so, and I also encourage you to follow me on this channel for more of this insightful content I share from time to time. Thank you very much, guys. It has been a wonderful moment with you guys today, and in fact we were able to treat the USDJPY, the XAUUSD, and of course the GBPUSD up, where we were able to identify simple setups that we are going to be using to guide our trading activities for today. And for those who are joining us for the first time, I do hope you are able to gain one or two things with us here. And in fact, the more time you spend with us, the better you get in understanding how this works, and eventually be able to use this information to make your own independent trading decisions. So I look forward to seeing more of you tomorrow, same time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.